Good afternoon, everyone. Thank you, Karthike, for a warm welcome and warm introduction. As Pinky ma'am rightly said in her opening remarks, standard of auditing is one topic. This is one topic where generally we miss to look into those standards and we actually step into the shoes of accountants. And we try to more look into accounting and all those aspects. And there is a specific reason to do that. We, being a chartered accountant, always believe in numbers, in calculation. So we like accounting. Auditing standards becomes more of a theory. The subject itself becomes more of a dry when it comes to discussion. And probably that is the reason why we generally try to avoid. Again, a challenge for me, taking a topic on standard of auditings and post-lunch session. Already a dry topic and post-lunch. But let me assure you, let me try my best, whatever best I can. So with this brief background, let me start on the topic directly. All of us know institute issues standard of auditing, and there are a lot of essays which are issued. I'm not covering everything. I'm trying to cover few limited standards which would be relevant on day-to-day basis and on a practical requirement basis. So those are few standards which I would want to cover. However, for the sake of knowing, let us briefly see which are the standards which institute has issued, and I have actually tried to summarize in the structure like this. So there are few standards which will be applicable for the preliminary engagement activities, those which are 200, 210, 220 kind of thing. These are the standards which one should keep in mind when we are actually not commencing or even not we are starting the activities or audit activities. This is pre-acceptance or pre-planning kind of scenario. That's where these standards will be applicable. Then there is another set of standards which is SA 300, 299, 315. These are the standards which gives us guidance while we do the audit plan. So if we are doing the audit planning, these are the standards which one should look into. On the actual execution of audit, these are the standards which would be applicable, which is SA 320, 250, a long list. Of course, we are not covering all the standards here. There are a few standards out of this which we would be discussing. The execution standards continues. And once the audit is done, definitely we have to issue the audit report. And for audit reports, 700 series is the standard which we would look into or which we need to know. In addition to these standards, there are a few standards, series 800, which are generally for special purpose framework, which are generally used other than the statutory audit scenario or situations. And there are few SQCs, SREs, SAEs, and SRS. These are again for the scenarios or situations of non-statutory audit situation. So these is the gamut of all the standards which ICA has issued, and we as a member of ICA are supposed to comply or ensure that the compliance of these standards have been done while we are doing the audit. So with this brief background, let me move to the standard per se directly, which is SA 580 written representations. Excuse me for a second. Now this is one standard which we very commonly use, and we use this as a terminology management representation letter. And typically our audit would not get completed without we applying or without we obtaining management representation letter or call it written representations. Now many times it has been observed that management representation letter or a written representation has been misunderstood or misused. Like there are few areas where auditors obtain the representation without actually getting into the depth of the transaction, meaning to say that management representation is not a substitute of audit procedures. As an auditor, I have to ensure that all the audit procedures which I was supposed to conduct are conducted. However, even after going through those audit procedures or audit evidences, if there are some further clarification required or some further information required on those particular transaction, then you obtain the representation from the management. So the point what I'm trying to drive here is representation is not a substitute to the audit evidence. For your audit purpose, one has to follow all the audit procedures, obtain all the evidences, and there if one needs any further support, then the representation has to be obtained. But for all practical purpose, I have seen auditors or chartered accountants actually tend to take everything in the written representation even without going into the transaction. So that is something which one should be very careful, and in my view, this is not the right practice. So with this background, let's jump on to the written representations. So the definition as per standard for written representation is, and basically deals with the auditor's responsibility to obtain representations from management wherever applicable and with those charged with the governance. So there is a situation that you may obtain a written representation from the multiple people, not necessarily that the representation has to be received, say for example, either from CFO or from MD or so on and so forth. The representation has to be obtained by the auditors from multiple parties involved. Now there could be a scenario where you may want some technical information, say for capitalization of fixed assets or type of nature of those assets. Now that CFO may not be in a position to certify, but there would be engineers which would be there in the organization which would be a right person. So absolutely, we as an auditor can definitely take those representations from those technical persons as well, and not only limited to the representation from the finance team. So that is something which we need to know. So when we look at the definition, what does written representation mean? It means a written statement provided by the management to auditor to confirm certain matters or to support audit evidence. Now as we discussed few minutes, one of the limb which was to support audit evidence. So this says that this is not the substitute to audit evidence, but this is to support some evidence. In addition to this, this representation would contain confirmation on certain matters. Now what would be those confirmation of certain matters? Those certain matters confirmation could be that the management has taken due care about making the financial statements as per the accounting framework which the management fits into, certain accounting policies and certain decisions which the management would have taken to make these financial statements. So those kind of confirmations or matters should be part of the representation in addition to additional evidences which supports. What should be the form and the date of the representation? Definitely this should be in writing and this should be addressed to auditors. This is the basic form of the representation. As far as date is concerned, what we should ensure is it is practically or almost near to the signing of audit report. Definitely not after the signing report. Why? Because there would be certain matters or certain additional information or clarification which we would have taken as a part of representation, basis which we would have decided or basis which the auditors would have decided to form an opinion or to form a view which would be forming part of the audit report. Therefore, this has to be practically before the date of signing report or definitely before the time of audit report. Representation should contain the data on the financial statements and the period for which we are auditing. As we discussed, it can be obtained from the management with various responsibilities. And in case of specialized person knowledges, we can obtain from them as well. So not necessarily that it has to be from the finance team. Generally, the representation would have broadly the management responsibilities, and this is what we discussed a few minutes back, that the management would confirm that the management has complied with all the accounting framework which the entity is into. All the necessary controls are in place and are effective, and all the relevant information and access which we as an auditor would want to audit, they have given those access, and all the transactions which ought to be reported in the financial statements are recorded. So these kind of confirmations on a general basis should be taken or should be forming part of the written representation. In addition to this, we as an auditor may need, as we said, certain confirmations on certain audit aspects, which could be the various accounting policies which management has followed to record a particular transaction. As far as title on various immovable properties concerned, those again can form part of management representations. Of course, that does not mean that I would not see the agreements or documents which are for those ownership, but those can be still part of management representation. Any other plan or intentions of the management which may impact the values reported in the financial statements, rather basically carrying value, those kind of statements could be part of representations. Any other laws and regulations aspects can be forming part of representation, including compliance and non-compliance on both all the other laws, and any specific area, as we discussed, where we need an additional comfort or an additional support from the management after looking at particular evidences, those would be forming part of representation. So, was this the only standard which was requesting to obtain the representation? No. This is one standard which generally says, there is a specific standard which says that we have to obtain the representation. However, there are multiple standards which also refers on those respective essays, which says that on these areas, you should again obtain the representation from the management. And which are those standards? Essay 240, which deals with fraud. So it says that for this fraud aspect, we should obtain a representation from the management that there are enough controls and there are no frauds happening on the company. Those kind of confirmations have to be taken. Essay 250, consideration of laws and regulations in an audit of FS. So this talks of any other laws which are applicable to the company. So even for those matters, one can take the confirmation that this representation that XYZ are the laws which are applicable to the company, and those have been complied while making these financial statements. Essay 450, evaluation of material misstatement identified during the audit. Here again, we need a confirmation from management that all these uncorrected misstatements which we would have identified as a part of audit process would not be material and may not need any further impact or any further, and which would be immaterial. Audit evidences, specific evidences or considerations for selected item, as we discussed that there would be few technical items where we may need a support from expert of the client or say of other auditors. Those kind of confirmation also has to be part of representation. Essay 540, auditing accounting estimates including fair value estimates and related disclosures. Of course, all the significant assumptions which the management would have made to make various provisions or estimates which are again in line with the respective accounting standards, those confirmations have to be obtained. Related party, to confirm that all the related parties are reported and all the transactions which are identified have been reported and accounted properly in the financial statements. Subsequent event, this is one standard which we are going to discuss little later in detail. But again, subsequent event says that we have to obtain a confirmation that there are no subsequent events which may, or there would be a readjusting or a disclosure event. Those kind of confirmations have to be taken. Going concern, again, the plan from the management, again, going concern standard says that you need to obtain the representation from the entity, from the management, to ensure that the company is following those going concerns, or company is a going concern and there are enough plans, future plans or support to justify those going concern assumptions. SA 710 comparative information, again to confirm that there are no prior period items which need an adjustment for the previous period, which again says that you need to take a confirmation. And SA 720, the auditor's responsibility in relation to other information. Now, as we all know, in the audit paragraph, we have to certify that we have also verified or seen the other information, which could be in the form of director report or MD&A and all those things. So there, assuming if the management has not prepared by the date which we finalize the accounts, we need to take a confirmation that once the management has finalized those statements, they would provide us those information, and depending on the information provided, if there is a need, or if the need may be, and if there are some situations which may warrant a revision of the audit report, then one may do so. So these kind of confirmations also have to be obtained, which are coming from other standard of auditings. Now, assuming if you've obtained the written representation and you have a doubt on those written representation, like you don't have a comfort that there could be some issues, or you may be doubting the competency of the management, in that case, what do you do? So what you would do as an auditor is that you'll have to again perform an additional audit procedures to ensure those areas and make sure that you are satisfied to that extent. And if not, then probably you may take a view or a call on your audit report that whether you need to qualify or we need to modify your audit report. So those aspects will have to be kept in mind where one has doubt in the written representation given by the management. There could be a scenario where management may not also want to give the written representation. Under such scenarios, and for all practical purposes, if that is the scenario, then one may want to see little more detailed. The auditor will have to perform more stringent audit procedures to ensure those areas, because if management is not willing to give any representation, then definitely there would be a doubt that why is management not willing to give those kind of representation. Therefore, the responsibility will be more on the auditors to ensure further audit, to follow more audit procedures. And again, depending on the outcome of the additional procedures which are followed, one will have to take a view on the audit report, and if there is a need to qualify the report, then that has to be done. So we did discuss that with written representations, whether they are sufficient and appropriate evidence. The answer is no. These are only supporting, or these are only the additional evidences which one would collect on the evidences or the audit procedures which one has already performed. So you need an additional support. Example, if there is a transaction where management has not supplied or not shared any audit evidence, and one cannot simply take representation on those transactions, it will not help. And as we said, this is not a substitute to audit evidence. This is only going to support the existing evidences which we would have seen or verified in the course of our audit procedures. So this is again summarizing written representations ordinarily will confirm representations explicitly or implicitly given to the auditors in the form of management responsibilities, sharing data and all those things. This also helps in ensuring that there is a reduced misunderstanding, or there is no misunderstanding between the management and the auditor on a particular transaction or a particular aspect of the financial statements. So this is going to help that way. We did discuss that this is not a substitute, this is an additional evidences. So this was one accounting standard which was very relevant, and we use this accounting standards, or we take representations on a regular basis. And this was basically the requirement of the content of standard of auditings. Any specific question on this? I would want to pause at each standard and take questions there and there itself. That's how I would want to. Yes, sir. Mm-hmm. See, generally, in addition to the information which is given by management, you would also obtain various forms which are in the form of DIR or MBPs. Those directors have to sign and give it to the company. So these are the related party relations which an individual or a director would have listed in these forms, DIR and MBPs, and would have submitted to the company. So those forms would have to be taken, because again, this is coming from a third party thing. Management is not giving this. Those directors in an individual capacity they are giving. So this would be an additional procedure which you will have to follow. Frankly speaking, these days, you get a lot of information from MCA, honestly speaking. If you put a din of some director, I mean, it gives where that person, of course, it will not give the exact details, but you still get a clue that where is he associated, where is he connected. So those kind of additional procedures one need to follow, and there are many tools as well available, where if I put the name or the SIN of the company, I mean, it throws wherever that person or director is relative. So these are some additional tools or procedures which we'll have to follow while we are conducting the audit, and these are must actually, because related party transactions are such that now everyone wants to literally, I mean, this like in Hawkeye, everyone is on that related party transaction disclosures. So one has to be very careful. Any other question on this standard? All right. So let's move to the next standard, which is subsequent event. Now, subsequent event is an event which has happened after the balance sheet date. So there could be 2-3 type of subsequent events. One, which is after the balance sheet date, but between the date of auditor's report. Second scenario is from the date of auditor's report to the notices, and all those auditor's report have been circulated to the shareholders. And third scenario is after all those financials or reports have been circulated to the shareholders. So now these are 3 important scenarios which are covered in subsequent events. While as far as accounting standards is concerned, we've only learned adjusting and non-adjusting event. But under what circumstances we'll have to test these adjusting and non-adjusting events, and what is the auditor's responsibility for these kind of subsequent events. So as I said, we'll have to break into 3 categories of subsequent events. The first category is assuming the financial year is March 25 and the entity finalizes accounts for March 25. The accounts are approved by the board on 31st May. That is one category. Second category is auditor's report, second category is auditor's report signed on say 15th June. And third category is entity issues financial statements to the members along with the notice and director's report, say on 1st September 2025, and then thereafter. So these are few buckets which we'll have to make. Now when it comes to responsibility of the auditors, for the category up to the date of issuance of audit report, which is 15th June 2025, we have a responsibility by virtue of standard of auditing that we will have to follow certain audit procedures. So we'll have to actually conduct certain audit procedures for a period 1st April 25 till 15th June 25. So this is one specific requirement of this standard where we have to conduct certain audit procedures. Now, any period after 15th June 25 in our example and 1st September 2025, As far as conducting audit procedures is concerned, we have no responsibility. Like, we did not conduct any specific audit procedures unless otherwise we've been a party to know that something has gone wrong. But until 15th June 2025, it is our responsibility as an auditor that we will have to perform certain audit procedures to check about this subsequent event and then decide whether those are adjusting event or a non-adjusting event. So if this is understood, then broadly this standard is understood that they have to break into these three buckets. So we did discuss that occurrence of subsequent events could be between the financial statements and the auditor's report. Situation 1, auditor's report to the financial statements made available to the users. Situation 2, and thereafter. This, we all know that assuming if there is a subsequent event, then we'll have to classify adjusting event and non-adjusting event. And if those are adjusting events, then you have to give the effect in the financial statements. And if there are no non-adjusting events, then you simply give the disclosure in the notes to accounts. And no adjustments are required there. Now come to first situation. As we said, the period of consideration is 31st March to 2025 to 15 June 2025. As we said, we have to perform certain audit procedures to identify all such events. Primarily conclude whether those are adjusting events or not adjusting events. And again, based on the decision of adjusting and non-adjusting, you give the necessary treatments in the financial statements. And you obtain representation on these kind of statements as we discussed in SA 580 as well. Now what are those additional audit procedures which one will have to follow to identify those subsequent events? You'll have to read the minutes of the later period. You'll have to see the budgets, cash flows, projections. You'll have to also inquire from the management or those charged with governance and maybe the local finance or accounts team. So these are additional procedures which we will follow or which we'll have to do while we perform to check the subsequent events. Come to second scenario where the subsequent event was identified after 15th June but before 1st September 2025. So 1st September 25 is the date where it is released to the shareholders along with the notice and director's report. Now here, actually there was no obligation on auditors to perform the procedures. However, if auditors get some information or obtain some information that there is an event or a transaction which qualifies as a subsequent event, and the auditor tests those events. Now the moment such events are made available or auditor is privy to those information, then in that case auditor has to perform those additional audit procedures to verify whether the reporting for that transaction will be applicable or how would that be applicable. And the moment that is done, again auditor will have to conclude whether this is an adjusting event or a non-adjusting event. Situation is a little tricky here because the audit report has been issued, the accounts have been approved by the management, and however, this has not been released so far to the users or to the stakeholder. Now here, what will auditor do after performing those additional audit procedures is go to the management, check with the management what are the intentions of the management. How does management wants to address those events? Whether they are keen on adjusting the financial statements or not. Now depending on that, we'll have to decide as an auditor what kind of actions are required from our side. So assuming that the management is keen on making those changes, if assuming it is an adjusting event, management intends to modify the financial statements. I think the life is a little easy where management would modify the financial statements. We may issue an auditor's report, additional auditor's report, to specifically include the impacts of these adjusting events or to highlight that this revision has happened on account of these additional subsequent events which has come to the light. But there could be a situation where management may not intend also to modify the financial statements. Under that situation, auditors will have a responsibility to write to management to make sure, or rather clearly indicate, that the audit report is not correct because the financial statements are not correct to the extent of subsequent events adjustment. Therefore, this audit report should not be circulated further. So this is the clear-cut communication which auditor should make to the management, reflecting that these auditors' report are not to be circulated further because this is not the correct position or right audit report as on the given date for this situation. So these are the broad guidances which is given in the standard in a situation where management intends to modify or management does not intend to modify. We did discuss this slide. This is mainly about how to deal with the amendments of the financial statements in case the subsequent events have been identified. Now there could be still a scenario where even though management may want to modify the financials, but by law that may not be possible. So under those scenarios, again, this audit report may not hold good. One should inform to the management that this should not be circulated further, and also write to the statutory body, say MCA or those kind of bodies which would govern those entities, that this has happened, the financials could not be modified because of restrictions in law. Therefore, these reports should not be read or they should not be circulated further. So we also have a responsibility to inform the regulator under certain situations or certain circumstances where these financial statements cannot be modified by virtue of restriction coming from the law. So these are some illustrations in case of subsequent events, that how does one report to. So if there is an enough disclosure made in notes to account, then there could be an emphasis of matter or other matter depending on the nature of transaction of that subsequent event. So one has to be careful that we draw the enough, we make the enough disclosure as far as audit report is concerned for subsequent events as well. Yeah. Audit trail. Yeah, sure. Because those kind of transactions would get recorded at after the actual transaction date. So yeah, one need to be mindful on those reportings as well, whether that may need a reporting there or no. In fact, I would be more worried on ICFR report as well. So, I mean, this reporting on main audit report happens. But since these kind of subsequent events, which are important subsequent events, which have been slipped or skipped to get recorded, I don't know how much controls are in place from the management side to ensure that these kind of events does not get skipped. So therefore, one will have to be careful to analyze or revisit your ICFR report as well, that whether there are enough, whether one would be right in completely saying that ICFR is in place or it is prevailing as expected. But again, that will all depend on the materiality and all those aspects one need to keep in mind. But yes, all reportings in the form of audit reports needs to be reassessed, whether after these kind of events, how to report those. So the last scenario, where even the financial statements have been released to the users, again, as we discussed, that otherwise there was no obligation on the auditor to perform any specific audit procedures, but now that there is a situation where auditors have been known or become privy to some transaction, then the only choice which again the auditor has is to speak to the management, and again the management would take a view whether they want to amend the FS or no. If the amending the FS, then your report would change, or you will have a reference to the earlier report, so and so forth. And if it does not, then you inform that this kind of reports or financial statement should not be further circulated for distribution. Yeah. Sorry? So the test of examples could be same what you would test for accounting standard. Like for a situation existing on the balance sheet date, the event happened after the balance sheet date. I mean, like similar like what the standard says, that there was a fire and the debtors got bankrupt and all those things. So I'm saying the testing will not change what is given in the accounting standard. So those tests will have to be performed. No, I don't think this is fraud scenario. This is definitely not a fraud scenario. Now, fraud will altogether take a different direction. I mean, I'm not going into ADT4 and all those things. But this New India scenario, if I have to refer that, probably that is not something which is a subsequent event. The situation of fraud happened as of 31st March was not known to anyone. So probably that may not be an adjusting event. But definitely that could be a non-adjusting event in terms of disclosure. The moment that has happened, and if the auditor's report are already released, then one should, as we discussed in earlier slides, that one should inform the management that this may not be the right audit report, and one should not rely on those aspects. So as I said, for testing whether it is an adjusting, non-adjusting event, we will have to go back to accounting standard and see whether this is what is required there. Here what we are discussing a scenario is assuming if something has happened, then the standard of auditing gives the guidance that if in such scenario, if financial statements are not getting adjusted, then how do you address those situations, or getting adjusted, then how do you address those situations. So with this we jump on to the next accounting standard, which is audit documentation. The very generic definition of audit documentation would be documenting the record of audit procedures performed, relevant audit evidences, and the conclusion reached by the auditors. So whatever procedures we have performed as an auditor, that has to be documented. Whatever evidences which we have obtained, that has to be documented. And how have we reached on a particular conclusion on the audit report, that has to be documented. So these are broadly areas which would get into the documentation file. If I have to say it a little differently as well, then in case of audit procedures, you will have to also document nature, timing and extent, like what audit procedures we followed, what time followed, who did that, and on how many transactions or to the extent. So all this will be part of audit procedures, and even those aspects will have to be documented as a part of documentation. Which documents generally we would document? All the documents which are created or executed at the planning stage, at the execution stage, and at the reporting stage will have to be documented to comply with SA 230. Why do we document? I think the answer is very simple. I mean, this will help us in audit planning, performance supervision, also helps in future periods audit. Definitely it helps us in presenting before regulators in terms of peer review, QRB, NAFRA and all those agencies. And this will help us in concluding our audit opinion, that how should our audit report be looking like. So where do we document? So standard allows or guides that there could be two type of documentation file. One would be permanent audit file and one would be current audit file. And it also allows to store in physical or electronic form. Now permanent audit file would generally contain the documents which are more or less in the permanent nature, which would not change on year basis, or the documents which are not relevant or specific to a specific year, the documents which are applicable for entity as a large entity as a whole, those documents would generally take place in permanent audit file, and any documents which are relevant for the audit of current financial year or the year which we are auditing, those would generally be stored in the current audit file. This is the broad segregation or bifurcation between maintaining the documents between permanent and current file. Generally, what are the kind of documents which one would document at the appointment level? Appointment letters, engagement acceptance, continuation decision checklist. Now, assuming there is a new client in year 1, where we would have performed we would have maintained all the documentation in terms of doing KYC before accepting that client, taking NOC from the previous year auditors and all those things. So all those compliances are there. However, even for our existing clients, on year basis, we will have to maintain a checklist to conclude that on what basis we are continuing with this client. Are there any reasons or are there any issues where for next coming year or next financial year I should not do this audit? Those analysis have to be done, and that has again to be documented as a part of our documentation file. Independence confirmation, yes, we need to take all the independence confirmation from all the team engagement team, that whether they are independent to that entity or the auditee. Any other communications from the previous auditors or any other confidential documents which you would have obtained during the appointment process. As far as category of planning is concerned, definitely the scope should be documented. Definitely the minutes of kickoff meetings with the management which you would have done should be documented. All your resource planning strategy, KYC, your materiality, how have you decided on those materiality, and all your risks assessments will have to be documented, which would be categorized under the category of planning. As far as execution process is concerned, I have taken few examples that for share capital you may maintain various forms filed with the ROC, or you may download from MCA records to show authorized or paid up capital. These are some documents which you would maintain in your file. For fixed asset PP, physical verification reports or important acquisitions or agreements is something which you would maintain. For trade receivables, confirmations is something which you would have obtained, that will be forming part of your documentation file. Cash and bank balances, physical verification of cash and bank balance confirmation. Revenue, cut-off procedures, what are the procedures which you would have followed to ensure the cut-off procedures are complied with in terms of booking the revenues, those will have to be documented. In addition to that, confirmation, we did discuss representation. Any other experts which you would have relied upon while concluding your audit, may it be in terms of your expert or may it be in terms of auditor's expert, all those reports will have to be documented as a part of your documentation file. In addition to that, going concern is very critical aspect where one need to be very careful, because in audit report we do comment on going concern. So that is one area which one needs to be careful and have enough documentation for the entities who are into that gray line of whether it is a going concern or not kind of scenario. So assuming somebody is into losses continuously, and even in future business plans it is showing losses, and entity still continues to show that as a going concern, then what are the reasons, those kind of justifications that why the entity continues to be going concern, those all will have to be documented there. So again, that will be forming part of your going concern documentation. Various accounting policies, the basis on why these accounting policies have been considered or why those accountings have been done for the recording purpose, it will have to be documented. So these are broadly documents which one will document as a part of documentation file. There could be some evidences or some vouchers or some documents, whether that needs a documentation. Say for example, minutes books, whether you keep a copy of whole minutes books as a part of your documentation, the answer is no. You may keep the extract. Because I'm sure the management would not want to share the whole bunch of minutes due to confidentiality issues. So we can keep the extract of those minutes. Whether you keep the record of all the bill vouchers, the answer is no. Certain critical aspects is something which you would maintain as a part of documentation. Confirmations, definitely yes, they are part of a documentation file. Whether any other legal books or records, the answer is yes, because those would impact your contingent liability disclosures or maybe booking provisions and all those things. So those kind of documents will have to be maintained, and any agreements or contracts which are special in nature, definitely not the regular agreements or contract which one would be entering into with the customers on a regular basis. Now those kind of contracts, you may not record all the documents in your file. You may restrict yourself to the specific contracts or agreements. So these are the documents which one need to maintain. We did discuss about permanent audit file, what kind of documents would sit into the permanent audit file. These are the kind of documents which generally sit into the current audit file. Okay, very important. What is who owns this document and what is the retention period for which we should maintain? So primarily the ownership of all the audit work papers or audit documentation is of the chartered accountant or the auditor. That's the legal requirement as far as ownership is concerned. Nobody can claim those documents. Auditors should actually also not share with anyone those documents in complete form as is. Wherever required by any law or any agencies, then auditor can circulate their extracts or those relevant portions. But the whole set or the complete documentation belongs to auditor. Nobody can claim the ownership on those documents other than the auditor. As far as retention of audit documentation is concerned, the revised retention timeline is 7 years. Earlier it was 10 years, which has been now revised to 7 years. So from the date of issue of auditor's report, next 7 years we'll have to maintain the audit documentation of that audit. So the important here is to notice 7 years from the date of issuing of auditor's report. So assuming I am issuing today audit report for a period March 15, say for some reason, then the retention of these documents will have to be made until March 32, because in 25 I have signed the audit report of March 15. So you don't go backwards like 25 ka backwards 7 years. No, that is not the case. So the requirement is 7 years from the date of signing of audit report. So that this is one thing which one should keep in mind as far as retention period is concerned. The famous quote, as everyone says, work not documented is work not done. So this is how this important is, and one has to ensure everything is documented well. I need not talk much on the quality of document. I believe already yesterday there was a discussion on NAFRA and the kind of quality of documentation which NAFRA is expecting. When the large size or big fours are struggling to maintain, I really wonder how the mid-sized firm would really cope up with that kind of documentation requirement. So one has to be very careful now. There are a lot of tools available in the market now which helps to maintain the document the way a typical peer reviewer or a regulator would have wanted to. So one should really explore those kind of tools as well and ensure the necessary documents have been maintained that way. There are challenges in maintaining document. For all practical purposes, what happens is we create a lot of documentation after the audit has completed. So one has to make sure that those trails of creating document or maintenance of the documents have been done at the appropriate time, and for no reason it should get evidence that these have been created later. Because what happens is, as far as your time limit to organize the document file is though to be understood as 60 days, but frankly speaking that leeway is available only to organize the file. I mean, you cannot create a new documentation or new evidences once the audit has been signed. So post your auditor's report, you cannot create any new evidences. What best you can do, or what institute allows, is that you can organize or streamline that available evidences or documentation within the next 60 days from the date of signing. Meaning, after 60th day, frankly speaking, you cannot touch the audit file. So if some documentations are maintained in soft form, please make sure that those are not reopened or not changed after 60th day. The moment that has happened, meaning the general assumption would be that this has been tampered afterwards or created afterward. So that repository will have to be maintained properly to ensure that soft files are closed maximum or not reopened after 60th day from the signing date. So this is broadly on audit documentation. Any specific questions on audit documentation? The tool name, there are many tools. Some international tool is, one is Inflow, then there is ACL, then there is Auditor's Desk, Any Audit. I mean, there are many. CCH, audit documentation. There are many tools. This helps in ensuring the documents which are required for regulatory purpose. I mean, I've been told, but not necessarily that you maintain. At our office, of course, we recently have gone into one tool, but so far we were maintaining everything in Excel. So not necessarily that Excel is wrong. You can very well do there as well. But what happens is this maintenance of trail on Excel, when these activities have been performed, all those things are getting difficult. So these tools will capture all the movements, all the transactions, like what activities has happened when. So this will be the advantage, but this also has a disadvantage, because all of us know how practically we do the audit, what time we create this documentation. So one has to be careful. One has to maintain the balance on these. The next important standard is external confirmation. Of course, all of us know there is no rocket science for this thing. Basically, there are two types of external confirmances where actually we obtain the confirmation maybe from debtors, creditors, or bankers, or any other borrowers. We obtain the confirmation directly, and the confirmation language could be two types of language. One would be positive, one would be negative. Positive meaning you are expecting a response from the person to whom you have sent the confirmation, and in case of negative, you are not expecting the response, but you give a deadline that by this date if something is not received, then you believe to assume that the amounts which are stated are right. So again, very simple, but only one thing which I wanted to highlight on this standard is, practically when you issue these kind of confirmation letters, not many are responding. So there one has to be careful that how do you address those situations, and in those situations, in my view, one should further follow the additional audit procedures. Like for example, if you have sent a confirmation to debtor and some debtor has not responded, what one should do is see the later period financial or accounts and make sure whether the receivables which are shown are received generally, or in case of payables, those amounts are paid, and so on and so forth. So this is one point which I wanted to highlight on these standard per se, that again the general tendency is we've sent the confirmation, हमारा काम हो गया, अब मेरी कोई जवाबदारी नहीं है. So that's not right. If confirmations are received, well and good, but if they are not received, then we as an auditor will have to perform an additional audit procedures, which would be reviewing the next year's financial statements to ensure whether the amounts which are receivable or payable are receiving or are paid off. So that was the only one point which I wanted to highlight in this standard. Otherwise, this is quite simple thing. Except for, I mean, one more scenario could happen where sometimes we have observed that management doesn't intend to initiate specific confirmations for specific persons. Yes, sir. I completely agree. So, of course, that judgment of where you want to send a negative confirmation or where you want a positive confirmation has to be followed, and I completely agree with you that negative confirmation cannot be for the material amounts. I mean, there are n number of reasons why one would not confirm if it is negative confirmation. So yeah, without getting into that further aspects, I agree with you. Generally, negative should be in immaterial amount. So one more situation which can arise for these kind of scenarios is even sometimes management don't intend or they don't want us to send confirmation, and they will give n number of reasons कि अरे यार वो भेजेगा नहीं, मेरे को follow up करना पड़ेगा, ये करना पड़ेगा, वो करना पड़ेगा. The moment this happens, frankly speaking, it raised my eyebrows कि कुछ गलत तो नहीं है ना. And the moment that comes into mind, definitely काम बढ़ जाता है, and बढ़ना ही पड़ेगा, करना ही पड़ेगा. So as I said, even on those scenarios, one need to evaluate whether there is a specific scenario or situation of fraud kind of thing happening or no. And one will have to again perform an additional procedures to ensure that whatever receivable payables are right. And if those kind of debtors or receivables or payables are large in value, I mean, and if the management is not intending to initiate the confirmations, there are high chances that one may rethink how should one report in auditor's report. There may be a modified opinion required depending on the fact, but yeah, one has to be vigilant on that aspect as well. No, I think ECL under 109 is very completely different animal. I mean, you'll have to create a model on how do you want to make provisions. So actual confirmation will not decide your ECL model. Definitely not. Because that is, ECL will be basis your risk management theories. I mean, how do you want to manage your risk and how much provision you want to make there. So this is definitely not linked to external confirmations. So coming to audit sampling, again, very important standard, but very loosely used. I mean, I don't know how many of us actually make a logical calculation or working to select the sample. I mean, though there is a random selection of sample allowed in standard, but that random is not the random which we actually do. I mean, I have seen random, chalo, ye 15 din ka le liya random. That's how it does not work. So random also has to be some with logic base. So therefore, this again is a very important standard of auditing which one needs to do, and practical standard where we face this day in, day out. So there are some important definitions of this standard. It says audit sampling. So the definition for audit sampling is application of audit procedures to less than 100% of population. So definitely we do on test check basis, we don't check 100% vouchers or transactions. So we select certain transactions on which we would perform the audit procedures. That is called audit sampling. And the logic is that each of the vouchers out of total vouchers will have a fair chance of getting selected for our audit procedures. So that is what is defined as far as audit sampling is concerned. Population is complete data set on which we would do the sampling. For example, purchase register could be a population, or a sales register could be a population, or a journal register could be a population. Sampling unit is defined as one sample, like out of purchase register, if there are 100 entries, one entry will be one sampling unit. That is how the sampling unit is defined. Anomaly. This one word is important to understand. Anomaly. Basically, anomaly is a misstatement or an error which is a specific transaction, which is of one time or a special nature. See, generally when we perform our opinion or when we issue our opinion, and if you identified some misstatements in the course of audit, what we would assume is that out of 10 vouchers, say 100 rupees ka error mila hai, and if for 100 vouchers, we will assume that 1000 is the errors which one would expect. And if my tolerable limit or error limit is say 1500 rupiah, then I am good to ignore those kind of findings. But ये सारे calculation में anomaly kind of transaction जो है, जो one off transaction है, उसको ये calculation में नहीं लेना है. Meaning when you are calculating your misstatements, you should exclude this specific errors, misstatements, do some calculations for other misstatements, come to number, add this anomaly wale misstatements, and then compare with your tolerable. So anomaly wale errors ko proportionate multiply nahi karna hai is something which we should keep in mind, and therefore this is one area which one need to keep in mind in the course of audit. Because this one-off or one instance is not the representative for the whole population. So therefore this has to be considered separately for calculation of tolerable errors. So it also get to define that what is sampling risk. The sampling risk is the risk that even if, based on your, the audit which you would have performed based on the sample, the opinion could still change if you audit for 100% vouching. So that is defined as a sampling risk. Generally, in case of test of controls or test of details, how do we really conclude, or how does it really work? Generally, controls are more effective if there are, and if there are no controls or less effective, then they actually ये अपना erroneous वो है. See, that's how we make a perception of those transactions. कि हमने एक control check किया, or if everything is right, then we assume to that all the controls are performing right or otherwise. So these can happen depending on the entity, depending on the transaction, depending on the experiences. One will have to be careful in concluding on controls and details this way, but sometimes this can give a wrong result as well. So how do you sample? Of course, the process for sampling also is defined in essay, which says first you decide the, you design the sample, then you extract the sample size out of that, and then you select which transactions which you want to cover as a part of your audit process. While designing the sample, one should keep in mind that what is my audit process, what is the purpose which I want to achieve on those population or those samples. That is something which should be kept in mind. Depending on that, one should design. Sample size should be sufficient enough to ensure that sampling risk acceptability is at very low level. Meaning कि ऐसे sample define करें कि chances है high population में से सारे cover maximum cover हो जाए, और जो भी results आए वो ensure करें कि this is more or less, or if you do the audit 100%, then it would more or less come to these kind of conclusions only and not otherwise. So that is something which one should keep in mind while you decide the sample size. Generally, larger the sample size, the risk would be low, and vice versa. That can happen, which again should be kept in mind while deciding that. What kind of techniques one should use to sample is whether statistical or not statistical. This will decide, or this will depend on the sample, or this will decide what kind of sample size you would select. Therefore, those approaches also will have to be planned properly, that what approach do I follow to select the sample, which is statistical or non-statistical. We will discuss in next slide what are they. So this is the discussion which we mentioned, that assuming if the assurance intended is very high, then your sample size will increase, or vice versa, for both controls and details. Okay. So what is statistical sampling and non-statistical sampling? So statistical sampling is a scientific approach or a mathematical approach where we would decide which are the samples which one would pick up to do the audit. That is basically a statistical sampling, and this would be broadly on some probability theories. This would drive a probability theories to decide. And something which is not statistical sampling is a non-statistical sampling, and generally in non-statistical sampling there would be more of a judgment used by the auditors to pick up certain transactions or to do some audits. Type of statistical samplings, random sampling. Now, this is the method where you may pick up any random number. Say, assume your sample size is 10 out of 100, then you may pick up any 10 sample out of that 100. Though there was no bias in selecting any specific samples in random sampling, but the chances of something getting missed is very high. So random sampling generally should be avoided, and as far as sampling method is concerned, one should try to be a systematic sampling where you decide some logic. For example, out of my 100 population, and if my sample size is say 10, I would say every 10th number will be selected for vouching, or every 15th number, or every 12th number. Now these kind of samplings will have a better result than the random sampling, so one should try and avoid random sampling. Stratified sampling is something, an extensive or a further extension of systematic sampling, wherein you may break your population into various buckets. So for example, in case of systematic sampling, I take a bucket of purchase register. Now I will apply that sample theory there. But when it comes to further stratified sampling, what I would do is within purchase register, I will break purchase into two parts, say material purchase, say packing material, and then apply the sampling. Now that will give me a better chances of giving a quality evidences, because assuming my risk and rewards or the kind of volume or value of packing material could be much different than my material, and if I merge both this type of transaction and do a sampling, the results definitely will be unusual. This may not give you the right result. Therefore, the best sampling method could be stratified sampling method, where one can break various type of transactions into the buckets and then apply the systematic sampling on those buckets. This would give the best result. Again, there are a lot of tools available which helps in identifying the samples from the population size. In fact, Institute has got some Excel utility on their website where they give this tool, so one should try and use those tools as well. And another best method could be monetary unit sampling or a value weight sampling, wherein based on high value transactions or we would decide to pick up those. So this, in my view, should be in addition to the stratified sampling which we have used. Considering the risk assessments and considering the materiality, one should also apply monetary unit sampling to the certain transactions. Non-statistical, as I said, it's purely judgment or haphazard, which in my view should not be followed. This may not give the right number. Block sampling, I mean, there is a tendency, block samples, I will do vouching for all transactions of 1st April to 15th April or 15th March to 31st March. Now these are kind of block sampling examples. One should avoid that also, because those may not be the representative of full year or full period. Therefore, in general, non-statistic sampling should not be considered for the purpose of sampling method, is what my view is. Once we have created the samples, of course, we perform the audit procedures, and depending on the audit procedures performed, the quality of evidences, we decide how should this be addressed, whether these need an adjustment in the financials or no, the misstatements one. So that is the audit procedure which we need to follow. So this is something where I wanted to spend a little time again, as we discussed a few minutes back. Is projecting misstatement. Now, assuming out of 10 samples, if you've identified errors in say 2 samples, so typically the tendency is कि अगर जो 10 में इतना transaction error है, तो what could be your total errors within these whole financials? So that is something which one need to calculate. This generally will be for only details testing and not for test of controls. Test of control will have its own way of testing. So that's how you calculate the misstatement, and as I discussed earlier, that anomaly should be dealt separately for projecting misstatement. It should not be given in multiple effect as we do for otherwise. That misstatement, whatever you have calculated, projected misstatement, will have to be tested or checked along with your materiality which you would have decided, or a tolerable error which you would have decided. If this consolidated misstatement is within that reach, you may not give any adjustments, or you may not adjust your financial statements. However, if there are any adjustment required, because or if your projected misstatement has gone beyond your tolerable limit or materiality, then you as an auditor will have to revisit your audit procedures again. Of course, whole of the planning can go for a toss. You may have to replan probably if you don't want to conclude otherwise. So this is something which one need to be mindful when it comes to calculation of projecting misstatement. Tolerable misstatements we discussed how do you calculate, and which is for test of details. For test of controls, meaning if you are testing any controls and if some control fails or if they are not effective, then again there also you would have decided that these number of deviations or these are the deviations which are okay with you. If those are again within that limit, nothing to be done, but if those are not within that deviation limit, one need to revisit the whole audit process again. This is what we discussed, that how will we evaluate the result of sampling. Again, this whole sampling thing will have to be well documented, that how have we assumed or how have we concluded or how have we selected this sample. The same philosophy that if it is not documented, it is not done. And the documentation of sampling should include following parameters. It should include what objective you want to achieve by selecting this sample, by performing what audit procedures on those samples. What is the population size? What is the sampling unit, sampling frame, approach, methodology, size, so on and so forth. This will all be forming part of your audit sampling documentation. This again are list of few tools which are available for sampling methodology. I think these are few important standard of auditing which I wanted to cover, because these were the standards which we would actually come across, or we will do audit. While we do the audit, we come across these standards on the regular basis. So on this standards, now we can take up the questions. Anything specific on sampling or otherwise also? I think with this, then we can conclude. I hope I've concluded on time. Thank you.